Good afternoon. Getting right down to business here. What just happened? We're going to find out in just a moment. We're doing it live and doing more at 4 weekday afternoons, right after Guy Benson, now at 3 here on 790 KBC. And just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air on 790 KBC. Streaming live online worldwide at KBC.com. And the on-demand Mottek On Money podcast, KBC.com. Apple, iTunes, YouTube, all of your favorite podcast platforms. Stock posting the worst one-day loss so far in 2025. We saw a tech wreck on Wall Street today with big tech names leading the way lower. The Magnificent Seven with a terrible 7 today. NVIDIA and Apple leading the way lower. NVIDIA shares down nearly $6, back to 106 and change. Apple down nearly 12 at 227. Pretty much across the board, big losses. And Tesla also pulling into reverse in a big way with Tesla shares moving sharply lower. We'll take a closer look at this coming up here momentarily. The Magnificent Seven of tech stocks collectively wiping out $759 billion in market cap during today's sell-off. Stocks seeing their worst day of 2025 today, prompting investors to warn that further selling was likely ahead and that a bear market for the NASDAQ couldn't be ruled out after the Trump administration failed to ease fears about a potential recession. The NASDAQ especially hit hard, with the NASDAQ pulling back 728 points, the Dow down 890 points, the S&P 500 closed down 156. The NASDAQ last week fell into correction territory. That is a drop of 10% or more from its most recent high. We're on bear market watch for the NASDAQ. President Trump over the weekend tried to downplay the impact of tariffs policies having on stock market and businesses during an interview with Maria Bartiromo on Fox News Channel's Sunday Morning Futures. The president said he wasn't ruling out the possibility of a recession this year. The sell-off today, spiking the uncertainty, and we saw the VIX index, the so-called Wall Street Fear Index, up 19%. Crypto's also all over the place, moving sharply lower. Bitcoin right now at around 79,000, up about 400 here at the moment at 79,316. Ethereum up 5 at 1,875. And Doge is all the way back down to 15 cents. All of this after a rough week last week. We did see an update on Friday, but the S&P 500 notched its worst week since September with a drop of 3.1% for the week last week. The Dow was down 2.4% for the week, and the NASDAQ gave back 3.5% for the week, and we're off to this rough start here to the new week today. I'll discuss tariffs, the economy, and the markets, and extended coverage later this hour with prominent Los Angeles-based economist Kevin KLOWDEN, executive director of the Milken Institute Finance. He was the lead author of Strategies for Expanding California's Exports, which examined the vital role trade and exports play in California's economy, among many other credits. Kevin KLOWDEN will be joining us live later this hour. Nervous time for consumers and automakers because of the threatened tariffs and other factors. We'll also see the latest report on car loans. A lot of them going bad these days. We'll get the latest from Lauren Fix, editor-in-chief of Car Coach, and the co-host of the Total Car Score podcast. But right now, let's get right to it here with veteran money manager GABRIEL Wisdom, managing director at American Money Management, based here in Southern California, also author of Wisdom on Value Investing. Good afternoon, GABRIEL Wisdom.
Good afternoon, Frank. You know, we need to remember that this is the first of a 4-year presidential cycle, and it normally is a very rocky, bumpy year. In fact, the past 120 years, going back to 1896 exactly, the post-election year performance has been the weakest, about 3% on average. Now, there have been some exceptions. The S&P 500 actually improved when Donald Trump was elected first time, Barack Obama, his first year, and George W. Bush, when he began his respective term. The market was pretty good, but that's unusual. So the research shows that the stock market's lowest returns during a 4-year presidential election cycle come in the first year. And the reason is the new administration can afford to take some very hard, untasteful medicine, which is what we're seeing. We need to bring inflation down, and these tariffs are clearly deflationary.
On there live with Gabriel Wisdom with American Money Management. So we've been hearing these terms all day long, a risk-off kind of a day, a deleveraging happening. Obviously, the AI names were getting pretty frothy and taking a hit today. As I mentioned, NVIDIA, the Magnificent One, back down to 106 and change. Tesla, by the way, down more than $40 today, down to 222, a drop of 15.5%. What about these so-called Trump trade stocks that had seen a big rally since the president took office and now are, in many cases, lower than they were since Inauguration Day?
Well, Frank, you said it. Risk is off. Risk was on, and the animal spirits were running rampant. But corrections are caused by fears. Fears that the economy is going into a recession. Yardeni and Associates, over the past 15 years, they counted some 66 of these so-called panic attacks, which is what we may have seen today. It's fear of a recession. Now, bear markets, on the other hand, are the result of actual recessions. There have been 3 bear markets that occurred without recessions, but those were very unusual. The most recent was in 2022, and memories are short, but 2022 was a very difficult market year. Of course, we know what happened in 23 and 24. That risk was on, and it felt pretty good, and we're on balance. We're higher all across the board.
On there live with Gabriel Wisdom with American Money Management, and what about the Mag 7 here, and overall, are you doing any bottom fishing here with these Mag 7 names?
I think it'll be time reasonably soon. AI needs, what NVIDIA is selling. Of course, the other big companies, some of the Magnificent Seven members, want to compete with NVIDIA, but the capital equipment needs are surging. A lot of capital needs to be spent to build out data centers and increase power generation globally, and that's driving a demand for lots of industrial companies. And we saw GE Vernova with a $6.4 billion backlog of gas turbines needed for backup generators. We've seen NVIDIA's processing units, the GPUs that require palladium, copper, cobalt. These are elements that are all cheaper. That means more profitability for some of these companies.
On there live with Gabriel Wisdom with American Money Management, and what turned out to be the worst one-day drop we've seen so far this year for the major stock market averages, with the Dow down nearly 900 points at the closing bell, the NASDAQ down 728 points, and the S&P 500 down 156. The yield in the 10-year note is back down to 4.22%, and we've also seen a reaction today among the crypto names. As I remind our audience here, we talk to the biggest fans of crypto as well as the harshest critics. So you're an observer of what's happening in the crypto space, and we observed Bitcoin taking a big hit today, below 80,000. What do you see happening in the crypto world here now?
Frank, there's no question that there's a limited supply of Bitcoin by design. 21 million coins, I think it is. But the other cryptos, they don't have these restrictions. We've heard a lot from the Trump administration in the last couple of weeks about a U.S. Bitcoin reserve, but these reserves are not so unusual. Countries around the world routinely stockpile commodities and stranger things even than Bitcoin, like helium. Canada has maple syrup reserves. There are cheese reserves. We have the U.S. Strategic Petroleum Reserve. So, it isn't just Bitcoin. And right now, the appetite for Bitcoin it's just not what it was. But at the same time, Bitcoin's up over 1,200% since 2022. So not bad.
Yeah, I haven't heard of cheese reserve in quite some. Do we still have a cheese reserve? Does the U.S. government?
Yeah, some
still,
country does. There's a cheese reserve, I think, in Switzerland.
Well, that would make two. Maybe Wisconsin. That would be the place to have it. Now, what about other commodities here? We had John Kilduff on the show on Friday talking about oil prices moving lower, and sure enough, 65 and change for oil. That's got to be good news for the inflation numbers coming out again soon. But by the way, ironically, gas prices seem to be higher than instead of going down, they seem to be going up in the face of lower oil prices. We need to find out what's going on here. But what about oil and other commodities here? Gold, by the way, back below 2,900. Silver still holding up pretty well above $32 an ounce. What do you see in the commodity world here?
Well, I like commodities, especially when they go on sale, because they're absolutely necessary. Looking at the demand for commodities in a world that's rapidly growing and industrializing, it only seems to be improving. Now, the central banks of nations like China, Russia, and Iran, and these are not countries that share our philosophy, but they're very significant buyers of gold. The price depreciation of gold has been very, very steady since 2023. I see maybe a 4,000 per ounce price within the next year or two. That would still be a low price relative to the amount of inflation that we've had over the past 20 years. So, and then other commodities like copper. Copper's been going up in the face of an economic decline. That doesn't usually happen. It tells you that there's a lot of embedded demand for, of course, housing, for data centers, for everything that require, and electric vehicles as well, where copper is a primary component.
And, of course, copper, it's said, is the only metal with a degree in economics. They call it Dr. Copper, and we watch the price of copper as a proxy for the economy. So thanks for mentioning that. And what about this economy? You're also an economist, Gabriel Wisdom. We've been talking for many, many years on days like this, and, of course, great days, up days as well over decades during all of the big epic events that have moved the markets over the years. What's your gut feeling on where this economy is going and where the markets are going here?
Well, it's been a news-driven market, Frank. Last week, of course, President Trump suspended shipments of some weapons and some other intelligence with Ukraine. As the president's attempting to apply some pressure to encourage peace talks. But Europe is clearly not in agreement with this strategy. The European Union came up with what they're calling Rearm Europe. A Rearm Europe program puts aside some $841 billion, or 800 billion in euros, funds used to bolster the militaries of Europe's 27 member countries. And sure enough, Lockheed Martin was up today. A number of other defense contractors rose. Not every sector is getting hit by the Trump tariff fears either. We saw some of the consumer companies like Pepsi and Coca-Cola perform pretty nicely. Procter & Gamble and Merck and Amgen and utilities in general have been performing pretty well.
On there live with Gabriel Wisdom with American Money Management. I'm taking a look at the Forbes magazine billionaires list. We see Elon Musk with that big Tesla hit today. Tesla stock down about 15%. Elon Musk, the wealthiest person in the world, net worth is down to $319.6 billion, down $22.8 billion today. That's a pretty big hit. Jeff Bezos, looks like he's got a new headshot. Jeff Bezos, see his picture here at Forbes billionaires list, down $4.3 billion to $210.8 billion, way behind Elon Musk. Mark Zuckerberg shedding about $9.5 billion today to $206.7, and Larry Ellison with Oracle is number 4 now, wealthiest, down $8.5 billion to $183.1 billion. If you were advising these folks on a day like this, Gabriel Wisdom, what is your message to those folks that took a hit today?
I'd be sending them the world's smallest violin because they could play that. In fact, you can get them on Amazon. Jeff Bezos sells them for $4.99. I bought one for a friend who complains that they don't get to travel to every country that they want to go to because of various political issues. So I'm not worried about these guys. I am concerned that the companies that they represent would stop spending money to build out the necessary infrastructure for AI. I'm concerned they would reduce hiring. They're concerned. They have problems with power demand. They're going nuclear. A number of these companies, in order to create the kind of generation that could get electricity. Basically, in fact, 9% of total U.S. electric output is almost pretty much is dependent on nuclear now. We need more of it. So I'm concerned about that. And then I mentioned copper, the demand for copper in electric vehicles. That's going to push the price up. I'm concerned about more inflation in the second half of this year.
All right. At this point, any specific places where you are putting money now and or taking it off the table?
Frank, the international or the intercontinental exchange, ICE is the symbol, began in the year 2000 when a guy named Jeff Sprecher bought a small energy exchange called Continental Power Exchange. He paid $1 for it at the time. And most energy trading happened over the phone or in person in those days. And Sprecher saw an opportunity to move this trading online, which makes it, of course, faster and cheaper, more transparent. Now, they're a critical bit of infrastructure for the global markets in energy, in particular natural gas. Demand continues to rise for natural gas, and natural gas is basically a bridge between coal and renewable energy. It produces 50 to 60% less carbon than coal. So right now, I think ICE looks interesting, ICE, and then finally the stocks that did so poorly last year, the dogs of the Dow, those are acting pretty well. Amgen did well today. Merck's doing well. Coca-Cola. These were Procter & Gamble. These companies did not do well last year, and they became cheap. So those have my interest.
Gabriel, thank you very much for taking the call here on the roughest day of the year we've seen so far here in 2025. Thank you for stepping up to the plate here and fielding all the questions and, of course, doing a very thoughtful job as always here. Gabriel Wisdom with American Money Management based here in Southern California, also author of Wisdom on Value Investing. Gabriel, thank you very much for joining us live here this afternoon.
Thank you, Frank.
And coming up, we'll take a closer look at what happened on Wall Street today with the Dow down nearly 900 points. But first, the latest on your ride this afternoon, 790 KBC. Mottek On Money continues here, 790 KBC. Worst one-day drop for the stock market so far in 2025. And stocks logging their weakest first 50 days of a presidency since 2009 when President Obama assumed office in the midst of the global financial crisis back in those days. Today, the Dow came in for a closing loss of 890 points to 41,912, extending the sell-off we've seen in the last couple of weeks. The S&P 500 down 156 at 5,614, and the NASDAQ plunging 728 points back to 17,468. The yield in the 10-year note, 4.22%. Crypto also taking a big hit today with Bitcoin at the moment up about 300 at 79,229. Bitcoin cracking below 80,000 today. Ethereum below 1900, I should say, up right now about $5 at $1,875 per Ethereum coin. And Doge at the moment is down to 15 cents. The price of gold also pulling back, right now hovering at just below 2,900 an ounce. Silver at 32.16 an ounce. Crude oil after hours here slipping 22 cents at 65.81 a barrel. Looks like the so-called Trump trade stocks have been taking a hit. DJT, the Trump media company, down 258 today to 1992, it looks like. And also we're watching the Magnificent Seven, not so magnificent today, including NVIDIA, down more than $5, down nearly $6, as a matter of fact, to 106.98. Tesla down $40.52 at 222.15, a drop of about 15.5%. Meta shares down nearly 28 at 597 and change. Google down nearly 8 at 165 and change. Apple, among the big losers today, down more than $11 at 227 and change. Amazon down nearly 5 at 194.54, and Microsoft down more than $13 at 380 and change. Oracle closing down more than $6 today at 148 and change, but getting a pop in after-hours trading, but then turning lower. Oracle shares turning lower as a quarterly revenue miss overshadows cloud deals. That's the latest coming across the wires here right now on Oracle. We'll continue the conversation about what's happened here with the markets today, tariffs, the economy, and more coming up with prominent local economist Kevin KLOWDEN. Will be joining us live here shortly. And we'll also talk about what's happening in the car business in the face of tariff threats and everything else happening with Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. That and more straight ahead on 790 KABC. Mottek On Money continues here on 790 KABC. Investors and consumers on alert on recession concerns. We did see the stock market take a hit today on President Trump's comments about not ruling out a recession this year in his comments to Maria Bartiromo over the weekend. The Dow plunging nearly 900 points at the bell. By the way, that was not the worst level we'd seen today. It was down more than 1,100 early on. It settled down 890 points at 41,912. The S&P 500 down 156 at 5,614. And the NASDAQ down 728 at 17,468. This after the NASDAQ moved into correction territory last week, and we're kicking off the new week with the worst one-day drop for the stock market so far in 2025, and extending the recent losses, and now possibility of a bear market for some of the tech names which have taken a big hit, including the so-called Magnificent One, NVIDIA, down nearly $6 today at 106 and change, and the other Mag 7 names also moving lower, including Apple, down nearly 12 at 227 and change. A lot of nervousness about tariffs and the economy these days. Let's bring in prominent Los Angeles-based economist Kevin KLOWDEN, executive director at Milken Institute Finance, based right here in Southern California. He's also the lead author of Strategies for Expanding California's Exports, which examine the vital role trade and exports play in California's economy, expert on the Southern California economy. And Kevin KLOWDEN, thank you very much for taking the call here this afternoon.
My pleasure, Frank, and greetings, everyone.
Thank you so much for taking the call. Give us your reaction to the president's comments on the economy, which appear to have rattled the market today, and your view of what's happening here at the moment.
Well, one of the things that we've really relied on with President Trump is his level of confidence and his sense that he projects that he has a plan and that he is intending to go in a direction that he believes in the economy, that he believes in the stock market. And, as he's repeatedly talked about, so much winning and so many positive things. So when he expresses doubts and he doesn't rule out a recession, doesn't rule out significant developments like that, it has an effect. It has an effect on investors, and it has an effect even more broadly on the public.
And we also heard from the Fed chair last week saying that they're in no hurry to lower interest rates. So we did get those comments as well ahead of their big meeting coming up here in the middle of March. Uncertainty continues to weigh on all of that as well. And then, of course, you have tariffs in the mix, too, which seem to be rattling the markets. On the tariff front, give us your reaction to the latest news.
Well, the real problem we have right now is that we don't have any predictability on tariffs. The fact is that the lack of a clear end game and a lot of these announcements of tariffs are coming, no, we're postponing them, like with the car tariffs being pushed back a month, when the original Canadian-Mexican tariffs were announced and then they were pushed back 30 days. When we hear word about tariffs on champagne and tariffs on various other materials, let alone the fact that the tariffs on steel and aluminum, even if they are intended to protect what are vulnerable industries in the United States, have a market effect on manufacturing. They have a real effect on construction. They have a real effect on aerospace. They have a real effect on a whole bunch of different key export industries for the United States. So having all these layered tariffs and having a trade war going on with Canada and Mexico is playing havoc, and it particularly affects supply chains. And the other thing it does is that it takes out what was viewed in President Trump's first term as a major achievement in the USMCA agreement, the modernization replacement of NAFTA, because President Trump told us at the time that one of the key aims was to essentially encourage this friendly nearshoring, ally shoring, whatever this grouping was, to compete against China. When we're seeing that undermined after we saw considerable investments by American companies, not just in Canada and Mexico, but also in those countries to help shore up U.S. production, it's creating a huge amount of uncertainty, and it makes one wonder if, from various investors, businesses, and everyone else, if that the president is essentially doubting his own economic strategies from his first term.
Very interesting, and this is all coming off the crypto summit that he had organized on Friday, and the expectation was crypto-friendly administration would be bullish for Bitcoin and other cryptos. Of course, we did see Bitcoin at an all-time high after the president took office on expectations that it would be a crypto-friendly administration, and he assembled all those folks there at the White House on Friday, and we saw Bitcoin move lower, below 80,000 now. It's 79,000 or so here at the moment. AI, of course, another big topic of conversation, and the NASDAQ, all the tech names are the biggest ones, including AI giant NVIDIA, Apple, and so forth, all moved lower. What do you see happening on the tech front here that led the way down for the markets today, and also what do you see happening on the crypto front, given the big summit we saw there last week?
Well, the crypto front, what I think everybody's really been anticipating and waiting for is, the announcement that people were hoping on was this idea of a strategic crypto reserve, or some sort of clear statement and an actual plan, not just general interest coming from the government, or some sort of strategy that was going to invigorate the cryptocurrency markets. One of the things that we've seen is that as that language has been bandied about, there's been a lot of speculation, a lot of leaks around which cryptocurrencies are going to be preferred, which ones are going to happen, but there hasn't been a plan of execution yet. We're not sure if there is going to be a move to basically turn crypto into a more active part of the economy, or from a government investment standpoint, or to try and create a stronger, clear pathway where cryptocurrencies and fintech companies can play a larger overall role in stimulating investment, stimulating activity in the economy, whether it's in services, whether it's in other areas. And while that doesn't happen, it raises some reminders of Infrastructure Week during the president's first term, where there's a lot of expectation and interest in terms of, would there be these new announcements, these new partnerships, these new investments that hadn't quite come together. And at the same time, with AI, the tariffs are absolutely having an impact. There are very real concerns about how they play out on tech, how they play out on the global tech markets, and the idea also that with some of the internal divisions over artificial intelligence that have been somewhat leaked out to the public from the administration, again, where is the clear strategy? The president had a series of high-profile meetings with tech leaders, including with OpenAI and others. So it's this issue right now where, because there's so much uncertainty in so many other areas, and because we are seeing this real potential downturn in the economy, and even the president, not dismissing the idea of a recession, it's creating a circumstance where a lot of these buoyant expectations of growth in tech, growth in a lot of these different services, are now coming into doubt because there's no question based on the past that if a recession happens, investments in technology are one of the areas that get cut.
Economist Kevin KLOWDEN, thank you very much for taking the call and for your thorough analysis. As always, we'll keep an open line to you as we follow all these developments closely, as well as the firestorm recovery here in the Los Angeles area, which you're very much a part of as well, and we appreciate that. Kevin KLOWDEN, Executive Director at Milken Institute Finance. Thank you very much, Kevin, for joining us live here this afternoon.
Thank you, Frank, and good afternoon to everyone.
Thank you very, very much. And we get out to the freeways now on 790 KABC. Mottek On Money continues here in 790 KABC. Worst day for the NASDAQ since 2020, the pandemic year. We saw the big tech names move lower today with the NASDAQ tumbling 728 points, 17,468. The Dow plunging 890 points at 41,912. And the S&P 500 down 156 at 5,614. In the face of all this, the auto stocks moved higher. Looks like tariffs are off for the time being, for about a month anyway. The tariffs President Trump was planning to impose on automakers overseas. We see Ford shares moving higher by 6 cents today to $9.96. GM shares up 64 cents or 48 and change. And Stellantis of 14 cents at $12.87. I don't know if you knew this, but Stellantis includes Chrysler, Dodge, Jeep, Alfa Romeo, Dodge, I mentioned, Maserati, Ram, Peugeot, Fiat, Opel, and Vauxhall. That's quite and Citroën, the French company, all under the Stellantis umbrella these days. Someone who knew all of that is on the line with us now, Lauren Fix, Editor-in-Chief of Car Coach and the co-host of the Total Car Score podcast, following all the big news in the auto world, including the tariff story and what's happening. Lauren, thank you very much for taking the call here this afternoon.
No, anytime. There's a lot going on, and it's pretty daily. So initially what happened is the leaders of Ford, GM, and Stellantis contacted President Trump and his team and said, listen, can we get 30 days? Which, if you look at it, you think, okay, in 30 days, are they going to bring jobs back, production back? Well, they can move some tooling from Canada and Mexico, and maybe some parts. But really what the bottom line is the USMCA treaty agreement that was written by President Trump under his first administration, well, that's about ready to be renegotiated in July of 2026. And what had happened is after he left office, they started taking advantage of that treaty by shipping goods back and forth across the border. Even before that, they were working with them, and it was supposed to be no treaty at all as far as our tariff as components went back and forth across the border. But what ended up happening is Mexico and Canada took advantage of it. They either created a loophole or were not stopped under the Biden administration, and they started charging tariffs to U.S. car manufacturers, to the U.S. government, and it started getting out of hand. And you start looking at things like, why are we getting energy from Montreal to go to New York, Ohio, and Wisconsin? That makes no sense when we can make our own energy here. Much like, why are we getting dairy products, which I'm sure you've talked about with other guests, from Canada when we have Wisconsin, like the king of cheese, and we have dairy farmers all across America. So a lot of that, for some reason, got transferred over to getting it from Canada. But there's a tariff on everything that comes in. And so in order to get these people to the table, which is the hardest challenge, they're like, we're good with it. Of course, Canada and Mexico is good with the cars and everything else coming across the border with tariffs to them. But if you look at the bigger picture, we're almost 40% of the GDP of both Canada and Mexico, where their impact to our GDP is only about 2.9% and 2.4% respectively. So that's not a lot. But we are being taken advantage of, and President Trump is aware of that. And so when he said the tariff was on everything, he delayed auto parts and components because he knew that they could actually bring it back to existing factories that are here. Stellantis has already made a move. They have said that they will move back production to the Belvidere, Illinois plant, which they had already let go 1,500 workers, which is a lot of workers. And they started moving everything to Mexico. And that was because of the UAW that you and I talked about many, many times in a row, why they went on strike. Well, the UAW then got really mad. They tried to sue them. The courts stood with the car company and not with the UAW. But now President Trump is like, no, you can't do that. If you want to be tariffed, this is how it happens. They immediately said, We can bring production back of the Ram truck and some Durango SUV, not a problem. So that already happened before anything got settled. Honda says they're going to build the Civic in Indiana rather than in Mexico. I think you're going to see Ford doing the same thing with like their Mach-E, General Motors with some of their vehicles. And mind you, the only other car company that is made in the U.S., not made in Mexico or Canada, is Tesla. And they're not being hit with these tariffs other than the components for the batteries that are made out of the country and some other little parts. The bulk of it's made here. And so that's what President Trump's trying to do. Come back to the U.S., bring your people back, bring your production back, bring the jobs back. The economy will help. But sadly, the Canadians think it's an attack. And Mexico's already sat down at the table and said, yeah, we're definitely willing to talk, which is very interesting.
Very much so. We're on the air live with Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Is Stellantis most vulnerable to tariffs given the international makeup, all of these brands, Alfa Romeo, Peugeot, Opel, Maserati, and, of course, good old Chrysler, Jeep, and Ram. Fiat, too, in the mix there.
Right. They sell one Fiat product here in the U.S., a 500E, and they barely sell them. If you're looking for one, there's amazing deals because it absolutely is not selling. It's highly likely, in my perspective, that Stellantis will pull some of their lines here from the U.S. My guess it's going to be Alfa Romeo, Fiat, and possibly Maserati. They brought them here to the U.S. thinking they would sell. At one point they did. Their product is great, but there's so much product options out there right now that it's highly likely they'll pull it out because of tariffs and build more production here, take some of the Canadian production and bring it here to the U.S., which is not good for Canada. But if you're going to take advantage of us in this USMCA agreement, but that's partly why President Trump wants to get them to the table to say, let's sit down and renegotiate the agreement because they took advantage of the past agreement. And now he knows that. He knows what to put into the agreement. It's very interesting because of the impact on the economy. A U.S. Commerce Secretary Howard Lutnick said that the tariffs in Canada and Mexico will go into effect no matter what. So they're going to have to come and sit down at the table.
Lauren, thank you very much for taking the call here. Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast, always doing a fantastic job on the air and on the podcast as well. Lauren, thank you very much for joining us live here, Mottek On Money on 790 KBC. On the worst tumble we've seen for the stock market so far in 2025, the Dow pulling back nearly 900, S&P 500 down 156, and the NASDAQ down 728. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.
Expert entrepreneur Ed Milet is on a mission to max out your life.
So many of you have dreams in your life and you don't go touch them. You've got to begin to touch your dreams.
It's time to get laser focused on peak performance.
I'm going to give you very unique habits that I do on a daily basis. Say no more. Have deadlines in your life. Go to work.
And become the best version of you.
Take a day and serve that mission.
The Ed Milet Show.
Max out.
Follow and listen on your favorite platform.